Hello, and welcome to the last episode of the Novice to Pro series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So before we do any progress, kindly confirm that the voice is clear. Thank you for your responses. Hello, Dali. Hello, WM. Hello, Pato. Thank you for your responses. If anyone has just joined today and you have not gone through the entire series, you should know that this particular episode is the 10th episode in a series that we started a couple of weeks ago. And in this particular series, we are covering Novice to Pro, basically helping you transition from a complete beginner to a professional level trader. So in between the episodes, we started with right from the introduction. And then after introduction, we have gone through various topics that you probably need in order for you to transition. So I'll just check quickly and see a summary of these subtopics. So the first episode covered introduction to trading. Second one is charting skills. Third one, we focused on the tradable assets. Fourth one, we looked at knowing your candlesticks. Fifth one, market structures. Sixth, trading strategies. 7, risk management. 8, we covered understanding market news. And in the last episode, we did building a trading system. So today, it's going to be more theoretical, less of the technical stuff. And this is basically to help you complete and transition into a professional level trader. So trading is a business like any other. So you have to be very serious, and also you have to be prepared to make some investments into your trading system and also into your trading setup. So hello, Caleb. Welcome to the session. So first things first, you need to have a good trading setup and environment in order for you to trade professionally. So you don't want to be doing these, let's say in the house, in a place where, let's say you have kids, in a place where there's a lot of activity. You want a nice, quiet environment where you can seriously focus in the markets and trade successfully. So if you can, and if this is within your reach, make sure you have a special trading area. This could be a room in your house. It could be an office. Make sure that you have that. And also, in addition to investing in such a kind of environment, you also need to have a complete set of equipment. So you might need to have a laptop. That would be at a very basic level. If you're looking to go big into trading, you might want to have multiple screen displays. So you might want to have one display showing your charts, another display showing some of your analysis, perhaps live stream, among many other things. So invest in a proper trading setup. So I'll try and share a sample here, just to give you an idea of what I'm talking about. So I'm hoping everyone can see this particular image. So these are sample just got from the internet. So you might want to have a nice and a comfortable chair, especially if you're going to be spending a lot of time on your trading desk. You need, let's say, multiple displays to monitor different markets, check on the economic calendar, check on the live stream news, and so on. You might also need a good headset, especially when you're listening to content. You might have music setup, a good headset, and so on. So make sure that you also have some drinks or some bites on your trading desk. So every now and then, especially if you are spending a lot of time, you might want to hydrate. So just make sure that you have a proper trade setup. And once you get this done, then the rest is going to be easier because it's helping you shape up the mind such that whenever you are there, you know that you're focused on trading, you're looking at analyzing the markets, are looking for trading ideas, so you will be less distracted. So once you get that set up, there's more to trading professionally. You also need to join our creator trading community. So trading can be quite lonely, especially if you're doing it at home or in your own office and you're the only one trading, other people are doing other stuff. So if you're moving in a direction, you want to join other people who are moving in the same direction. So it's very important that you join our trading community, meet other traders, talk to them, discuss the issues, the challenges that you're facing in trading, your trading ideas, your trading system. Look into what they are doing, let them look into what you are doing, share these concepts, and hopefully you're able to solve problems together. So it's very important that you find other traders that are participating in the markets and then share those ideas. Make sure that you're moving in the same direction. So as we proceed, if you have any questions arising from my presentation, then feel free to type those questions in the Q&A section, and I'll be responding to those questions as we progress. Hello, Wonder Kid, and welcome to the session. So once you've joined the community, it's easier to narrow down to opportunities, to get market updates. We basically share market updates in communities. So if something is happening, we talk about it. We try and narrow it down, understand how it affects the markets, where we're expecting the market to move forward. And if this information is useful, then you can add it to your trading system and use it to make more money in the markets. So the other thing is that trading is a game of patience. And patience is not easy, especially when you're looking at the tape or the ticker charts. So for instance, if you are just day trading and you're just looking at the 1 minute chart, you are getting sensitive to every tick in price, then this can bring a lot of emotions and increase the chances of you being impatient. So it's a patience game. So you need a secondary activity that you want to be doing while your trades are running. So there's a lot of stuff that you can do while on your trading desk. So you don't just have to look at charts all day. Wait, want to do some other stuff. Could be productive stuff. Could also be some secondary income generating content and so on. So some of the stuff that you could do as a trading professional is one, you could play music. This is good. Helps you reset and focus on something else or something different. You could also be in the business of content creation. Let's say you are a writer, could be a vlogger, blogger, or whatever that is. If you are a content creator, then you would find it easy to focus some of your time into content creation, while the rest is focused on trading. So you don't want to be watching your trades every single second. So you might also be into gaming. Gaming is also a good kind of way of resetting, making sure that you're not just focused on charts. Sometimes you do something that is a little bit more fun. So if you're into online gaming, then that might be real nice for you. In addition to this, there's also research. You might want to research a lot of things in the market, a lot of trading ideas come out of research. You might reach out to a couple of people, a couple of institutions, gather some information here and there, read a couple of articles and so on. So research is also very, very important, especially as a secondary activity during your trading day or particular period. So whenever you've done your research, you have executed trade on your trading system, you want to be checking on those trades after time to time. Set this as 15 minutes, 5 minutes, 1 hour, and so on. So in between those intervals, this is when you do the secondary activities. And research is one of the most important things that you need to be doing, especially when you are going ahead with the trading. So besides these, if you've gone through the entire series, right from episode 1 to this particular episode, then it means that you should already be comfortable trading. You should have practiced those ideas, and I assume you are now trading on a live account. So what you do, you make sure that you continue learning. This is not the end of learning. The series was designed to shorten the journey and help you grab only the important stuff. So you don't focus on all the unimportant stuff in the market. You focus on the stuff that you need, the one that helps you through your trading journey. So this is not the end of learning. Make sure that you study more. There's a lot more to the markets, that more than you think, more than you probably don't understand right now. So as you participate in this activity of trading, also make sure that you still have time to continue learning and understanding more concepts about the markets. So one of the stuff you might want to consider going through is content, educational content on macroeconomics. You want to understand economic cycles. You want to understand economic policies, how they change, how they affect demand and supply. You want to understand some level of microeconomics, how companies work and all that. So make sure that you invest some more time and keep on learning. At the same time, you might want to read more, especially on topics like psychology. Trading psychology, market psychology is very important. Make sure that you read more on psychology, understand the psychology of the market, psychology of the people participating in the markets. Read more about investing, learn different valuation methods, different approaches that are used by different traders. So you want to read more about these and ways of taking advantage of different cycles and opportunities in the markets. You also want to look at charting books, charting techniques. So I only showed you the basics that you need as per right now, but you might want to get into more advanced charting techniques. And the only way you do this is by learning from other environments. You might want to look at YouTube videos among other websites. You might want to read books about all these topics. And also online articles can be very summarized and direct to help you understand some of these concepts. So it's very important that you continue learning. So as we proceed, as I mentioned, if you have any questions, feel free to type those questions and I'll be responding to them right away. So hello, Didan. Hello, Michael. Welcome to the session. So the next part I want us to focus on is changing your mind. So trading is a bit of a crazy game, and I want to reference what happened today with the pound USD. So early in the morning, you can see after the first 2 hours of the day, on the third hour, the pound started going down, and then on the fourth hour, made a huge significant move towards the lower side. So if you check the movement from the top here all the way down to the bottom, this was a movement of about 5,000 points, and this is roughly 500 pips. And this is not normal. It's not something that happens each and every day. So it's crazy and it can happen at any time. So always internalize that the markets can move by any number of pips in any direction and at any given time. So make sure that you have fully internalized that. Markets can move in any direction by any number of pips at any given time. And this basically implies that you must practice risk management at all times. There should be no single time where you execute a trade without a stop loss. So if you have not predetermined your risk, then you're technically gambling all your money in the markets. So make sure that you accept all your risks and you predetermine them before making a market entry. So this will make the entire trading process simpler and easier. So a quick and easy way to do it is to trade very small lot sizes, very small, really small that you don't really care. So if, for instance, your account trading balance is, let's say, $10,000, if you're trading something like 0.01 or even 0.03, then you probably don't care about the outcome of such a trade. So once you set a stop loss and take profit, it's usually a smaller amount. So in that case, it's probably not going to affect you emotionally. However, if you trade bigger lot sizes, then that's one of the biggest mistakes that beginners do. You are no longer a beginner. You've gone through the novice to pro series. You have to start thinking like a pro. And this basically means that you practice all those ideas, risk management, and so on. And most importantly, be prepared to change your mind at any given time. So changing your mind involves basically responding to price. So as you can see, since early morning, there was a sharp drop, and everybody was thinking now the pound is crashing. It's going all the way to parity with the dollar. Parity is basically a price level where £1 would be equal to $1. So after there was a lot of news and panic happening in the markets, and everyone thinking that the dollar is collapsing, the pound is collapsing and it's going down to parity with the dollar. Immediately after this sharp drop, a lot of technical traders knew this was purely overextended, and they started going for buy positions. So since then, we check a smaller time frame, you notice that the market has spent the better part of the day making a recovery. So most of the market activity since bottom has been moving upwards. So if you look at the swing, it's quite a huge swing. Measure the number of points here, all the way up to here. This is about 6,000 points or 600 pips. So if you participated in this pullback reversal of the entire momentum, then you made some good cash. And this is as a result of being able to change your mind real quick. So markets are going down, you're going down. If they start going back up, then you change your mind quickly and you focus on where the price is going, regardless of the buyers that you have in the market. So right now, if you notice, now the pound seems to be moving further downwards. So if the market got to this point, started changing direction and started going down, then you change your mind real quick and focus on the price going down. So it's all about being prepared to change your mind at any given time, accepting that price is the bottom line to everything in trading. So remember, any given time you're trading, regardless of how many indicators you have, whatever the research you are doing, always focus on price, because this is always what you are trading. So if you're not focused on this price, then you're probably doing it wrong. So price, everything boils down to price. Every banker, every trader in Wall Street, they're all looking at this particular price. So this is where your focus should be, where the price is, where it has been, and where it's headed. So make sure that you understand and internalize that information. So as we proceed, you should know that this particular session is not investment advice, nor is it recommendation to trade of any kind. So this is purely educational, informative, to help you understand these concepts. And if you decide to go ahead and trade, then you do it from an informed perspective. So we always encourage you to do further research and identify opportunities by your own, narrow down to these opportunities and take advantage of the markets. So that being mentioned, we'll be moving on to the next point. Don't ever be sentimental about any particular asset. This is a psychological thing that affects us as traders, especially if you're a beginner. So what often happens is that, let's say you are a gold trader. So if you identify good opportunities in gold, let's say there's a breakout, you trade the breakout, you make some money, price moves sideways, breaks out again, and you make some money. Then sometimes you can fall in love with an asset. You start feeling like, this is my right kind of asset. I like it. It treats me well. And then you get sentimental about it. So that's not the way to trade. You are not supposed to be any sentimental about the asset you're trading. You have to think of it as just like any other market. So if your strategy is doing well in a particular market, then you should know that that's only temporary. So if it's really doing well, you keep trading that market. But the moment that particular strategy is no longer working in that asset, you have to be ready to switch. You have to be ready to change your mind. So being ready to change your mind is something that you have to do consistently, and these will help you adjust to different kind of scenarios and situations that keep on happening in the markets every now and then. So don't ever be sentimental about these particular assets that you find in the financial markets. So for instance, if you have been trading the pound, every time you go for a position, it goes to your stop loss, you lose some money. You do this, let's say 3 times, and you start hating the pound. Say, oh, the pound is bad. Every time I do a position, goes to my stop loss. That would cloud your judgment. If such a nice position appeared or a nice trading opportunity appeared in the market, you would second guess yourself, saying that, oh, I've been losing money in this particular asset, maybe I should stay out. But if you're not sentimental about it, then you should know that if an opportunity is there and there's money to be made, then there's nothing sentimental about it. Just strike in like a machine and go for it. So you don't have to be sentimental about these particular assets. Treat them the same way. If there's an opportunity, go for it. If there's no opportunity, then you stay away. I hope this makes sense to you guys. So the next point on today's presentation is also very simple. It's quite an observation for me, especially for a majority of the time that I've spent training people how to trade in the markets. So you'll find that most people or most beginner traders are comfortable when they are holding trades that are in the red. But when a trade turns into the green, a couple of pips in, they are seeing $1, $2, $3, $4, $5, $10. Then they are quick. They rush to close that position. But if a trade is in the negative, they can even hold it for a day, a couple of days, a couple of weeks, just hoping that the price would turn green. So that doesn't augur well with the psychology. You are not supposed to get used to watching the red, seeing the red on your trading application. It can make the entire trading process very difficult for you. So train your mind to be comfortable with the green and less comfortable with the red. So if you have trades in the red, that is trades in the negative side, potentially making losses, then you should be looking at ways to eliminate them from your trading account and focusing on the ones in the green. So you should probably have 3 or even 5 trades running in the green and no trade on the red. If trades are on the red side, then you should not get comfortable about it. So it's a beginner thing. You find yourself most comfortable whenever the trades are in the red. But once they turn green, you get out of discomfort. You just want to get that money out of the market. So it's supposed to be the other way around. So you should probably look at ways of improving your trading such that you are more comfortable with the trades that are winning and less comfortable with the trades that are on the losing side. So it's something that you have to think about and practice consciously, that you train your mind to focus on the green side, focus on the winning opportunities rather than on the losing ones. So I hope that makes sense to you guys. So the next part is about using your demo account. So I may have mentioned at some point in my presentations or in any of my sessions that once you learn the basic stuff on the demo account, it's time to move away from that demo account and then start trading on your live account. So these will help you transition your learning to a better way. You get the most important lessons on your live account, not on your demo account. But then, the moment you become a professional level trader, and you're always looking for ideas, strategies, potential entries, exits in the markets, then the demo account might also become useful, especially when you are trying to experiment with some ideas. So you don't want to be experimenting these ideas on your live account. You want to be experimenting them on your demo account. So this is a whole new level of using the demo account. where you practice ideas on the demo account before you transition them to your live account. So let's say you've gone through the entire series. You started with a demo, then you moved on to live account. Let's say you started with $100, got to 300, 500. Now you're trading a serious account. You have, let's say, $5,000 in your account. Then at this level or at this point in time, you need a demo account on the side. So a demo account is where you basically experiment ideas. If you want to check out things like pip value in a trade, just execute a trade on the demo account. You see the pip value, you see the movement, the volatility before you execute those trades on your live account. So if you're learning, let's say about a new asset, let's say you're learning to trade an asset such as a CFD Bitcoin. I'll show you where it is. This is CFD Bitcoin. It's trading in a triangle. You have never traded this before, and you don't want to risk this on your live account. You probably just try and execute a trade on your demo account. See how that goes, see the volatility, the changes, understand the concepts, and once you're comfortable with that, then you can transition and now look for another opportunity on your live account. So make your demo account a friend where you experiment ideas, play around them. Once you're comfortable with them, then you transition that skill to a live account. So as I mentioned, today is going to be a very short lesson, mainly focusing on the theoretical part of approaching trading at a professional level. So to make sure that you have the right kind of approach in the markets, make sure that you are healthy yourself. If there is stuff happening around you, you are stressed, maybe you are sick, or you just lost someone, then you should know that you're not in the right mindset to trade. You should stay off your trading desk at all times until you are psychologically ready to tackle the markets. So always make this test. If you can't drive a car, you can drive your financial engine. You don't want to trade when you're stressed. If you've been in a fight, if you are in a stress, or even a burnout, it would really be negative on your side. So you have to be very conscious about this. So if you're not thinking properly, then stay off the markets. But then if you're on the zone and you have all your energies, then that's the best time to analyze the markets and look for trading opportunities. So at this point, I would like to take questions from you. If you have any questions, feel free to type them in the live chat and I'll be responding to those questions right away. So this is Q&A time. So if you have any questions, feel free to type them and I'll be responding to those questions as we speak. So good question. What are the best time to trade? This takes us back to a point I mentioned earlier. So I mentioned that the market can move by any number of pips in any given direction at any given time. So this means that every single second is a good time to trade. So there's also another point that I mentioned that at any given time, you're always trading price. So you are more focused on price rather than the appropriate time. There's no appropriate time to trade, but there's always an appropriate price to trade. So focus on price and where it consolidates. For instance, I've just shown you a chart here, and this is on Bitcoin. Bitcoin trades 24 hours a day, 7 days a week. You'll also be able to trade this asset even on a weekend. So for instance, right now, we are looking for a breakout, for the price either to break the upper trend line or to break the lower trend line. So this could happen at any given time. It can happen at midnight, at midday, early in the morning, in the afternoon, tomorrow, and so on. So the right time to trade would be when the price breaks the trend line. And this could happen at any given time. So I hope this answers your question. So there's no right time to trade, but there's always the right price to trade. So always follow the price, and then if there's something coming up, then you keep on checking on that price from time to time. For instance, I'll be checking at the price of Bitcoin at every, let's say, top of the hour. And if there is a confirmed breakout, then that will present a trading opportunity. So there is a question about, tell us more about variable and fixed by brokers. I think you're talking about spreads. So all spreads with FX Pesa are floating. We don't have fixed spreads. So what happens is that FX Pesa gets price quotes from the liquidity provider and then forwards that to you directly. So once you get those price quotes, you trade with them. The price quotes I'm talking about are these. All these are price quotes for different assets. And of course, every time you execute a trade, we charge you a small commission as a service fee for providing you that particular product and enabling you to access that particular market. So in that case, we don't have any kind of fixed spreads. So would you recommend books for us for either psychology and all that? No, I think there's one interesting book called, we call this, check out McDouglas' book called Trading in the Zone. That would be very helpful for you guys. So if you can access a book by McDouglas called Trading in the Zone, that can be very helpful for you. So there's so many more books out there. I would encourage you to research rather than just follow my recommendations. So a good question from Wonderkid, what's the value of 1 pip for 0.01 lot size? So a good question, as I mentioned, make the demo your friend. So what you do, you just go on your demo account and then execute a trade for the particular asset you want to test. For instance, let's say you are trading Bitcoin. This is a demo account, so you can go to new order, set 0.01, click, let's say, buy by market, and now you can see it's 0.01 for 0.01. So the value for 0.01 movement is equivalent to 0.01 of a dollar when you are trading 0.01 volume. So you can always just do this on a demo, and once you identify the value, then you can comfortably go execute on a live account. So you can always try this for any particular asset on the market, execute a trade on the demo, and once you learn it, then you can easily use that on the live account. So that's why the demo account is there. So another question here, can you predict how Bitcoin will move for the next few weeks for us? No, this is purely educational. It's not investment advice. So unfortunately, I can't do that. So if you're part of my community, then you probably find some of the analysis there when we're discussing the outlook for these assets. So please explain the best exit strategies for trades, knowing when to exit instead of waiting price to get to your stop loss. I think we covered this in a previous episode. So we mentioned you need to have some predetermined rules for making a market exit. One of them is having a way of adjusting your stop loss towards your entry once your trade has made a significant amount of profit. So you don't have to leave your stop loss there, lying there like a stone. If price has moved to your target by a number of points, then you might want to push your stop loss towards the entry point. If it's exit, you want to have some rules such that if the market goes back down by, let's say, this number of pips, then you make an exit. So it's something that we have covered in a previous episode, and I believe it's an episode about risk management. So another good question, how do I analyze indices? They seem very volatile. I will be doing a presentation on this. So this will hopefully be available from next week. So I'll be looking at analyzing indices and so on. So on Tuesdays from 4 p.m., we cover live market analysis or live US Open analysis. So tomorrow at 4 p.m., I'll be covering out of analysis regarding these. That is US indices, the Dow Jones, the S&P 500, the NASDAQ 100. At the same time, I'll be discussing some content about Bitcoin. If you're interested in learning about more about Bitcoin, then tomorrow might be the best point and also the best presentation to ask these particular kind of questions. So I think I've answered all the questions. Talk about demand and supply area in the chart. I think we have covered this in charting skills. It's all in the series. If you have gone through the series, then you have covered all these questions. So how can you set stop loss based on volatility? I think there's an indicator for that, stop loss based on volatility. There's a particular indicator for that. I don't know if it's available on the MT5. I think, yes, the ATR, you can use the ATR. It's called the average 2 range or something like that. I think. So it's called an ATR. You can use it to set your stop loss based on volatility. You'd have to do some further research about the indicator, understand how it works before you can use it in your trading. So having answered all your questions, thank you very much, guys. Thank you for your time. Is there something like copying trades? Yes, there's platforms where you can copy other traders' trades. I don't think it's very lucrative. I don't think I would be personally comfortable giving somebody else control of my money. So if someone is doing research, you have no way of telling whether they have made good or bad research. However, if it's you who is taking responsibility for doing research and identifying trading opportunities, then in that case, you can trust your judgment and make the right decision in the markets. So I don't prefer trusting that party when it comes to trading, when it comes to getting signals or even copying their trades. So you're better off on your own if you go through the session. That is all the 10 episodes. You practice all those ideas, then I'm highly confident that you will be a successful trader and you will not have to depend on somebody else's trades. So thank you very much, guys. I hope to see you on the next session. This is the end of this particular session, particular series. So we'll be doing more series covering other stuff. But if it's a transition from a novice to a professional level trader, then the series ends here. The rest work is on your side.